You are listening to the Lending Edge podcast, hosted by Scott Rose. Let's get started.
Hello, everyone, and welcome to episode 1 of the Lending Edge podcast. I'm your host, Scott Rose, and I couldn't be more excited to bring you our first episode, and I could not have asked for a better first guest. I'm excited to introduce you to my friend and colleague, Faith Schwartz. We had a great discussion, and I think it's a story that everybody will appreciate hearing. I've had the good fortune to know Faith for the last over 5 years now, and as I mentioned, not only do I consider her a colleague and a friend, but also a mentor. Faith has done some great things in our industry, and we'll dive into some of that today. And one of the things I've always admired most about Faith is not only her talent and her ability, but how she always sticks to her core values and does what she feels is the right thing to do, and how she's navigated some really challenging times in our industry and been a leader when we really needed people to step up and help us through some tumultuous times. And with that, let's get started. And I'm excited to share Faith's story. Faith, thanks for joining me today on the first episode of the Lending Edge podcast.
Wow, it's great to be with you, Scott. I'm thrilled to be here.
Well, I sure appreciate it. And I'm super excited for our conversation today. I think there's going to be a lot of value. I know myself, I've had the opportunity to get to know you better over the last 6 years. Obviously, you're on the board with class, and we've been able to work on a lot of things together in terms of advancing our profession. But more interesting to me, and I think to the listeners, is going to be talking a little bit about you today and kind of some of the things that you've done in our industry in very pivotal times. You know, I think of the housing crisis and the work that you did with Hope Now.
Right.
I think of the time during COVID, and we can talk a little bit about that in a little bit. But
Sure.
you know, the things that you've accomplished with being able to provide transformational solutions, and oftentimes in a very short period of time, which doesn't happen very often in our industry, right? Typically, it takes things a really long time to move forward. Maybe we can dive in just briefly to the housing crisis in a time of need, you know, something we had never faced before, and some of the work you did with Hope Now
Sure.
and helping people stay in their homes.
Well, a couple of things. First, it has been a pleasure being on your board for all these years, and you've taught me a lot about the valuation business, Scott, and your role as a chief innovation officer, and so it's really helped, and it's very logical for me to glom on to modernization. I'm always looking for improvements in the mortgage business, and class really represents that. So hats off to class. And as for me, what I think a pivotal moment for me was when I was at Freddie Mac and post time at Freddie Mac. I really got a good perspective of the kind of macro business. I grew up as an operator, capital markets person, but somewhere down the pike, I learned that, public policy matters, legislation matters, what regulators do matter, what civil rights organizations care about matters. And that was a learning for me the first half of my career, the first 15 years of being a little more outwardly focused and having an awareness of what all that meant. And when the housing crisis happened, because I'd had some experience on all sides of the industry, I was asked to lead the Hope Now Alliance through the Housing Policy Council, the Treasury Department, and others who kind of had known me in Washington while I was an operator. I was becoming more and more aware of the policy issues as well. And so it was a way to kind of temper the operational, this is how we've always done it. Yes, we have contracts, we have to foreclose on these people who are defaulting, and not, peeling back the onion to say, oh, were those products, oh, those were bad products. And consumers never had a chance because prepayment penalties were very extensive, and they were paying more than they had, and there was inflation in the housing. It was a bubble in housing, and why did the common person have 5 houses? Because no one checked their income, and that kind of limited documentation of products. So it was a messy time. It was a time when everything collided, and we needed Wall Street to step back and look through securitizations and help us adjust what we could out of the REMICs and the securities to make adjustments on modifying loans. For instance, we needed the GSEs to help Fannie and Freddie and look at their old waterfalls on loss mitigation and say, okay, we can do this to help mitigate immediate foreclosure, and we'll give people a chance to stay in their homes and work them through. We needed the Treasury Department and the force of the federal government and the Federal Reserve Board banks to step in and help us reach borrowers at risk. I've partnered extensively with those agencies to reach people who wouldn't talk to their banks or mortgage servicers. And then we needed the public to understand what we were doing as an industry to power through a very tough situation. I befriended the civil rights groups and the advocates through that time, but actually before that, when I was at Freddie Mac, to talk through some of the products in the business that were not attractive for borrowers. That at Freddie Mac, actually, we helped curb prepayment penalties and credit life insurance and things that were in the market that we kind of eliminated through our practices at Freddie, believe it or not. So a little bit of all of that came together, and I would just share with you that it was a great experience. Not many people wouldn't have liked what I did, because I did it for 5 years, and it was a tough job because people were always shooting at you. People were mad at each other, and the public was really angry. And so, long story short, I learned how to have a lot of grace in a very tough time, try not to take things personally, and then just try to pull together and get everyone rowing in the same direction. And I found it to be very rewarding, and we saved millions of people from foreclosure way back then by just kind of coordinating, getting together. Everyone was a little uncomfortable, lots of testimony to Congress, lots of people unhappy, but at the same time, we were kind of getting through the darkest time. So a lot of lessons to be learned, a lot of reminders of legislation, of regulatory power, of investor power through Fannie and Freddie and some of the others who could adjust their policies so that we could mitigate the risks for the consumer, but also for the investors as well. So it was a powerful time, and I'm who I am today because of that. And that's why I always look at the consumer on every angle, no matter what the bank's doing, no matter what the vendor's doing, no matter what class is doing. Is that a good consumer outcome? Because when you do that, things kind of fall in place. You have a better outcome for all. So that's my quick and dirty.
I love it, Faith, and I think there's a few things that I would point out that I observe from that, which is, one, that was extremely complex. I don't know if everybody can appreciate the amount of stakeholders that were involved and what had to happen. All those groups that you had to work with, and I know you keep the consumer always at the focus of attention, but I also think you do a great job of considering all those groups, which I think is really important to innovation. Right? When you're innovating, when you're driving change, and you're like, I know you don't always make everyone happy, right? There are people who don't like your ideas and the direction that you're going.
Not always very popular, but
no, you're not. And I heard a quote just the other day on a podcast, and unfortunately I won't be able to mention the individual where it came from, but just basically, in innovation, if you're not making at least one person mad a day, you're not innovating. And we can't make everybody happy. However, one thing I've always admired about what you've done is I really think you do take into all those constituents in mind to be able to drive these through at that pace, right? And to be able to execute on that, you have to. And so you were able to really bring all these parties together to buy into something, to move it forward. And maybe every piece didn't win over on everyone, but it really brought everyone together to get something done in a pivotal time for our country. I was on the sidelines. I didn't know you personally yet at that time, but I was also working on those same programs and watching what you were doing, and just little things like how you reached out to the consumer from a Hope Now versus having it come from a collections department where people were not going to be willing to be, more open to discussing what options, when really you were coming and saying,
Right.
hey, we want to keep you in your home. We're not trying to take your home from you. We're trying to keep you in your home.
Yeah, and I think one thing that's really important is I think we don't have it quite as bad now. It took a lot of rebuilding, a little bit of confidence back in the financial system. And I think we're, believe it or not, in a better place today than we were over a decade ago. However, partly the federal government and the civil rights groups and people and allowing some co-branding to go on was very powerful. And what was interesting is I didn't realize this, and I mean I did, in that I was signing letters sent out by the banks, co-branded with the Treasury Department, but my signature was on them from Hope Now, like we're reaching out to you on behalf of Wells or one of the banks, and it was millions of letters that went out. And I would have people reach out to me, say, I got a letter from you. And
Yeah.
it was, a reminder that consumers were really scared and they weren't communicating with their servicer. 1 out of 2 wasn't communicating. And that's a lot of loans. That was millions of people in foreclosure or in the beginning of it. The other observation is we would go to events across the country. So we would go to an event and 2,000 people will be waiting, not saying a word in line. Old people, families with boxes of documentation. And we would have set up in a stadium, lawyers, civil rights groups, all of the servicers to do the intake. Now, remember, these borrowers are borrowers who never were calling their servicers. Some of them didn't call them for a year. And they would be standing there with all their material on why they needed to keep their house. And it was just very sobering. And so when you go through that, and then all the stakeholders are there, sometimes we had politicians walk through, attorney generals, sometimes Congressman Barney Frank went to one of them. I mean, we had a lot of attention from a lot of people. You kind of get sober pretty quickly, and the gravity of the situation was real. And it was real as a people business that we're all in. So I think that was, again, it impacted me so much that I have a different lens. And I went to business school, I'm an operator, I am a business person, but I think you can be both and make sure you're weaving in that consumer centric view.
Yeah, I love that. We talk a lot about that when we're having personal conversations in terms of,
Yeah.
the business is the business, but in order to really feel gratification as an individual, you come in every
Yeah.
day wanting to do good things
Yeah.
and trying to do
Yeah.
good things for what's best for everybody, right?
Yeah, that's right.
I think that a lot with what we're dealing with in appraisal modernization and how really how could any of us not want to improve the experience for the consumer and for the other constituents,
Right.
trying to build a more efficient, a more equitable
Right.
process. There's really no argument against that. There could be arguments against potentially ways to achieve that, but
Uh-huh.
as a profession, we should all be pushing
Yeah.
towards a better
Yeah.
process, better solution.
I think one of the frictions and where the regulators have a fair pushback on some things is in the, I've been, this last decade for me has been about modernization, working with different companies like Class and others to really wring out the high cost of originations, which is over $10,000. So of course, I think it has an impact to borrower access to credit. Uh, we shouldn't have such a high cost to originate a loan. So modernization long term to me means, lower cost, digitization, less friction in the system. What the regulators worry about, and reasonably so, is you can't take so much friction out of the system that things go too fast and people don't understand what they're getting, and they have time to make sure they've ingested all the information on an appraisal and the disclosure situation, and just making sure that they know what they're getting into, like if 10 days later you're closing a loan. So I understand both sides of it, but I think the bigger picture here is it comes with better source data, better technology, ease of experience with a consumer. And Scott, that's what you stand for. And that's one reason I really value class valuation, because you're all about important process and certainty of data and clarity in translation, so that there's more accuracy and certainty in the transaction, and probably less bias. And all those good things come from better information and better data.
100%. And I think a lot when you were talking about that, about the opportunities where and how we can collect this information, especially if we're talking about the purchase transaction, when someone's acquiring a home, how can we
Right.
push all of that work further up the line towards the point of list, so that
Yes.
information can be captured, and it can be captured in a consistent, repeatable fashion,
Right.
and leveraged up front with more transparency without having to wait until the transaction's already in action. And then you've got all these things
Yes.
happening that could be potential pitfalls, or people rushing, trying to get them done. There's a lot of
Yes.
anxiety around the transaction. And
Yes.
also at the same time, trying to create as much equity as possible by allowing any consumer getting a mortgage to be competing against investors and cash buyers and things of
Yeah,
that nature, so that they
absolutely.
have just as much of a chance
That's
to
right.
buy that home.
That's right. And to your point, there's a lot around that for the VA and the FHA, and making sure that not just the GSEs, but all of the agencies who give liquidity to our mortgage market can, embrace modernization of valuation, and the private capital markets as well, just so that there's fungibility across all investors, and we have better execution on modernized processes like data, nimble tech, hybrid products, et cetera. So it's we have a journey. It's been a long time, but people are a little slow to change in the mortgage business. So
They are. That's, again, going back to our early part of the conversation, why I've always been so, I've always admired what you've done, because at times you've had to move really, really fast, and it's a really, really hard thing to do
yeah,
in our industry. Things don't
crisis.
move fast, right? Because there's so many stakeholder groups, right? Things
Yes,
take time.
exactly.
And there's policy, there's statute, there's lots of different things that we're up against in driving change. I think,
Right.
real quick, just to close out a little bit on that conversation, there are other aspects that always go through my mind as well when we're thinking about not only streamlining that transaction at the time of purchase for that particular transaction, but as we're implementing technologies that are repeatable, they're consistent, and they're standard, now we're also generating a more accurate pool of data for comparability to understand markets and to better help protect consumers, because we're finally getting to a standard where today we know there's a lot of inconsistency in terms of how property information is captured. And we're moving forward to a place where you send 5 people out, you get the same 5 results. It's all done to a standard. And now the information being captured is more consistent.
Yeah, no, I think that's right. And I mean, I am seeing the dial be moved on valuation. You and others are a big part of that, and we've been on this journey together a little bit, Scott. And I think it has the attention of policymakers. It's certainly, I give a lot of credit to FHFA and the GSEs for their push to continue innovating and automating and embracing some hybrid products. And let's face it, they do it after years of analysis. They're very smart about not doing anything too quickly. And I give them credit, because I don't think we'd be where we are without them in the overall mortgage market. And I just like to see a little more adoption and information sharing at the agency level, so that there's more decision making that's similar. It doesn't have to be exact, based on some of the great information that the GSEs have driven in the business. And that's true of a lot of different innovations, not just valuation.
No, you're absolutely right. I mean, we were in DC a couple weeks ago, right? And at the
Yeah,
FHFA
right.
event, and
Yeah,
the GSEs both shared their data and information that they have collected over these last 7 years of test
yeah,
and learns over
yeah,
hundreds of thousands of properties
right.
around the value of property data collection and the improvement of the quality of that data that we're collecting
Oh, yeah.
using these more advanced technologies, right? It's really, sometimes I think, and I won't dive into this too much, but as I'm an appraiser, appraisers get uncomfortable, and they think that when you're sharing information that shows an improved process, it's actually a slight on them, and it's really not. What it
Right.
really is it's showing how, when you bring in advanced technologies outside of the human, how you can improve that consistency and leverage these tools, the same tools that are driving self-propelled vehicles now, for crying out loud,
Right.
in our world
Right.
today. And in order to stay relevant and keep providing our constituents with a value add, we need to adopt these technologies. And
Yeah.
they are scary, right? Like, I
Yeah.
mean, the self-driving vehicles all the way to, the generative AI technologies that are rolling out now, very, very fast pace in terms of
Yes.
what does that mean to all of us in
Yes.
our society.
Yeah.
But as a business, if it's really important that you're paying attention to these tools to stay relevant and make sure you're implementing them to provide all of our
Right.
customers and our constituents a better
Mm-hmm.
solution.
Yeah.
Faith, talk a little bit about you told us about Hope Now. I think that was so awesome. What an incredible
Mm-hmm.
time and what an impact that made, including,
Yeah.
I believe, really set it up for the work that happened during COVID when we went
Yeah.
into that crisis. That had that work not been done at a previous housing crisis, would we
Yeah.
have been prepared to deal with all the people who stopped paying their mortgages during COVID? And maybe tell us a little bit about your view and
Yeah.
perspective of what
Well,
you did in that time.
I will for sure. One thing is, I mean, I think I give the federal government a lot of credit for acting swiftly during COVID, the pandemic. CARES Act, of course, forced a little bit of that activity by legislatively passing that, which, if you recall, a borrower could raise their hands and say, I've been affected by COVID, I can't pay my mortgage. That's all they had to say. They didn't have to prove anything. And then they could get up to 6 months. Some servicers only let it go 3 months, but technically it had 6 months. And then all they had to do was raise their hand again and say, I can't pay because of COVID. And they could get a year worth of deferral on their mortgage, which in a sweet way to think about it is it's that mortgage payment put on the back end of the loan. There's no interest bearing on it, and there's no fees. So let's just say it's 12,000 a year if it was $1,000 a month, or 24,000 if it was 2,000 a month. And when you refinance or sell the home, that's when you pay back the investor, in this case the GSEs, that $24,000 7 years later when you're refinancing or selling your home. Now that works when you have equity in your home. That works because you've avoided foreclosure. The idea is you go back and you resume your payment, the exact payment that it was before, and that's fine because maybe you got unemployed and then reemployed, and that was the idea behind it. Story short, it was kind of brilliant, and a lot of people were worried. I mean, there were millions of people that raised their hand. So once again, we thought, oh my gosh, are we going to have millions of people get foreclosed on? But I was part of a group with the Urban Institute and all that cross-discipline civil rights groups, some bankers, some mortgage companies, myself, and some of the trades were part of this kind of coalition. And we met twice a week on all the different issues, credit, and kind of to come up with ideas and policies. But people were starting to get a little bit irritated with each other in these meetings, and because borrowers weren't responding to their servicers, and servicers really were not supposed to be reaching out to them that often because they had this protection legislatively, but everyone was very worried what happened at 6 months. What if you don't talk to your borrower and they don't raise their hand? You start foreclosure because they didn't ask you for another extension. So that's as simple as it was. But for me, it was a complete example of what Hope Now did. And I said, so I kind of raised my hand and said, listen, I am happy to lead pro bono this effort. Let's pull together. And I set up a little steering team with, the MBA, the HPC, the civil rights groups, a couple of the bankers, and a big independent mortgage company. And said, you can be my boss. We're going to do this. And so we went through and set up how to communicate. We got a group of we got a tagline and a bunch of images out of the stock trade that we then had consumer focus groups review to give us what they thought we should pick of the images and the tagline, which was not okay. That's okay. And the idea was to send out material through social media and outreach to say, please know that your loan servicer is ready to help you, or the state housing agency is ready to help you. And then I asked the CFPB if they would co-brand that material with us, and they said yes. So we once again got the trust of the federal government. We got the banker, we had the civil rights groups, then we had the housing agencies, depending on if they were using state funds. And we leveraged that material through emails, through Facebook, through texts and mailers, inserts. And I got the trades to make announcements. They gave speeches on it, Bob Brooksmith, Ed DeMarco, and others. And then we solicited 60 banks and servicers and 120 nonprofits to participate. And then one of my colleagues, a company called Riskban, I'm on their board too. I asked them to develop a website for us, and they did, which was really nice of them because they powered it. And all the industry people could pull down the material to use in their communications. So it was pretty successful. I mean, the idea really was, let's just keep it out there. Let's make sure borrowers know about it. And we had the CFPB logo on it with us. So we were trying to make sure borrowers were getting communicated with when they wouldn't answer their bank or they wouldn't talk to them again. And, we were kind of revisiting the old crisis era, like no communication. Their head was down. They weren't talking to their banker because they had just raised their hand and said, I can't pay my mortgage. They didn't know if they were employed again. They didn't know if they could make a payment. So it was a very weird time, but it wasn't that hard to do. People were great. I mean, one bank said to me, Faith, I didn't cause this crisis. If I join it, I feel like we look guilty. I said, no, this is been done to you and the consumers. It's a pandemic. It has nothing to do with you. And trying to kind of talk logically to people instead of always being on defense with the consumer or the civil rights groups. And that's not what this was at all. It happened to all of us. It was a pandemic. So it was a very, once again, a good experience. I mean, almost everyone was very willing to do it. A few outliers, but they kind of came around. Some of the biggest companies who want to be careful of the branding and this and that, but we managed to get everyone to participate. So that was really fun. And it wasn't that hard because we had a playbook. So it wasn't, and I used everyone else's resources. There were no dollars spent other than what contributions people made on their own to, print mailers or email. And so it is a reminder that we can do great things in this industry if we just kind of get aligned. And it takes a little bit of risk taking. I didn't care as much. I knew it could be a pretty positive outcome, and it was a 2-year effort. So it was fun.
I one of the reasons I was so excited to have you come on the podcast is exactly that, because I think you're such a great example of how you bring all the people together in our industry. Really, you are. And I'm not just saying that because it's hard work, and there's a lot of varying opinions and varying views. And when you get everybody together, you can accomplish great things. And the reality is the housing system is critical to the United States. And during a pandemic, finding ways to keep that going, including even smaller things like what we're doing on our side, ourselves and a few other of our partnering competitors, co-competitors. We all had to release apps for homeowners to be able to capture information about their homes, to be able to provide to appraisers to continue to, procure loans during that time. Why no one wanted people coming in and out of their homes, which partially led to where desktop came out after, COVID. But it just requires a lot to keep things on the track. And it's amazing when you're under pressure what you can get done. It'd be great if we could do
true, Scott.
more of that,
Pressure will do it for sure. And but and I'm at a point in my career, I'm not gonna worry too much if someone's a little upset about something. If I know it's the right thing and it's pretty thoughtful and it's been inclusive, I'm less worried about a defect or two of someone who just can't do it. All we can do is try and work with everyone and keep powering through. And I think for all of us, it's just, maybe it's all my years in the business. I just, I get a little bit of a North Star and a moral compass and keep going. So that's a little bit what I like to do at this point.
I agree. I also think too, when I take some of that, feedback or comments myself, everybody's in a different position. Change is hard, and it's not personal. And look, we live in a really polarized environment
Yeah.
in today's world. And I think
Yeah.
about that a lot, whether it's political, whether it's,
Yeah.
within the appraisal profession directly around appraisal modernization. It's very polarized, a
Right.
lot of different ideas, a lot of different opinion. But at the end of the day, we all go home to our families. We all
Yeah.
have loved ones. We're
Yeah.
all human. None of us are
Yeah.
perfect, and we're just doing the best
Yeah.
that we can. And we're trying
Absolutely.
to show up every day
Yeah.
with what we believe is right. And as long as we stick
Yeah.
to our core values and our true north, then what
Yeah.
else can we really expect of ourselves, right?
Yeah. And I think it's important not to take things personally. I've gotten pretty good because it's often not, it's more the concept, or "Oh, I can't do that, or our bank can't do that, or, but they probably can, and it's hard work because internally they have to fight, the culture or the model on an issue. And I quite agree with you. I never bring politics into it. That's silly. That's something I don't like to do, and I don't think you need to. I think housing's everyone's issue.
You're right, 100%. Tell us a little bit, what led you to find, you're the founder of
Mhm.
Housing Finance Strategies.
Yeah.
Maybe, let us know a little bit about kind of what pushed you in that direction and
Yeah. I've had after Hope Now, I just didn't really want to go back into the industry that I loved and knew so well right away. And I wasn't sure what I was going to do next, but I was pretty sure I needed to transition from that kind of crisis area, even 24/7. And so I left after the big crisis was pretty much over in early 2013. And CoreLogic approached me to run their federal and state sales effort of data and analytics, which I had been working with all these regulators for so long. I knew their gap in data and systemic risk views. So that was pretty easy. But I said, gee, I don't want to just run a sales organization. I think you have to have a presence in Washington, a little bit more of a public affairs, industry relations, so that you can raise the profile of CoreLogic, which they really, at the time, they loved that. They actually did. So I did that for about 5 years, shifted a little bit more into the public policy when they combined sales with the commercial side. But we'd have a lot of symposiums, a lot of interaction with the government and the leaders in the industry. So it was kind of more of the same. And at some point, I missed driving some business outcomes. I missed the more tactical side. I'd grown up an operator. I'm a business background, even in my education. And so I thought, this next chapter, I could really just do whatever I want to do. I've had a great run, and I have. And so I decided to step down from a pretty high ranking job at CoreLogic, which was fine. And I gave them we worked out a 6-month notice. So there was a little bit of a transition, and I reported to the CEO at the time. And it was the most fun I've had. I just decided to step back from corporate America after all my years of being in and out of corporate America and then working on policy things. And I just hung a shingle, and a couple people invited me to join their boards. And I think early on, Class was one of my first boards, but I also built a small advisory team. And I've, advised trade associations, nonprofits, new product companies, fintech companies, had a nice handful of them. So innovators who've come who need some socialization, like, could I bring this into the mortgage market? And then we'd work with them, say, well, you need to find your way into the government agencies, or then you have to go to the private markets and work with a rating agency. So because of my background, I was able to do that. So, I have this great mix of work, but also my boards like Class that really keep me energized and focused. So I'm quite busy and still have a lot of fun in my work. But thank you for asking.
Yeah, well, I mean, obviously we get to work with you guys, and it's a really
Yeah.
valuable relationship. You have a great team that you've built there as well, and you guys do great work. So
Thank
I
you,
wanted to make
Scott.
sure
Well,
we touched.
thank you. And thanks for all you're doing for the valuation business. I am optimistic we're going to see changes and continued innovations introduced to the market. And that's how we're going to get better as an industry.
I agree. We got to keep putting stuff out there, and we got to keep advancing. Faith, in closing, I wanted to ask you, so if you had a magic wand today and you could make some sweeping change or small change, or if there was a certain area, if you could make an impact right now, what would that be? Where would you go
Oh,
with that?
that's a good one. Um, I think I would, you can't you can't force affordability, and rates. High rates is very tough right now for everyone. Obviously, housing supply, but it's not my expertise to figure that one out. I think there are some cool things going on there. I think I would work with the industry is hovering around a bunch of legacy technology. Think of ICE, Black Knight, mortgage cadence, think of all the different kind of technologies out there that frankly, of course they're aging, right? That's just normal, they're legacy systems. And then you have all this numerous vendors hovering around them with really great breakthrough ideas. But
Yeah.
as a lender and even as a vendor, you have to pay click fees or you have to get integrated into these older systems with less forgiving technology and nimble. The workflow and the innerwear is such that you're still going through screen by screen in kind of a more aging process. And yet we want an end-to-end system that already has a capability for digital income, asset, employment, valuation, even title it could reduce its friction in the title business. We have the technology, but we're still mired in legacy systems that doesn't allow for the technology to really soar and be competitive. Open AI, data flows in and out, back and forth. And so I would hope our industry can kind of figure out how to get better at data warehouses, better at exchange of information with better technologies so that they can operate more seamlessly in the business, which means I think our legacy technology has to be adjusted a little bit for that to happen. And lenders shouldn't have to pay 10 vendors. Yes, every bit of them might make it a better product, but it's way too expensive for lenders to be doing that and pay their legacy technologies and think they're now creating a better mousetrap. So that's an issue, and I'm frankly working on that with some people. So that's
That's
something I believe in.
I figured you'd have something kind of cool to bring to the table around that. And you're right. I mean, a lot of the platforms that we deal with that are very intertwined in terms of the
Right.
communication and the connections between all of the different businesses and verticals within our space are very archaic. They're
Yeah.
monolithic, right? And
Right.
moving into, obviously get the opportunity to work with some really bright people on the technology
Yeah.
side, much brighter than
Yeah.
I am. But I hear that often as we're
Yeah.
architecting our solutions is this transition from these big monolithic platforms into more smaller microservice
Right.
type environments that allows
Yeah.
for information to flow easier, to make
Yeah.
changes to those platforms without affecting the whole thing, so you can be
Right.
more dynamic, you can be more
Right.
iterative, you can do a lot more to
Yeah.
continue to improve how those systems work. So
Yeah.
that would be a great thing to see
So
happen.
that's what I would. But I appreciate that you've had me on today. It's always a blast to talk to you, Scott. So
Faith, I love talking to you. I really appreciate you being willing to come on and bearing with us on our first podcast here. So thank you so much, and we'll look forward to talking to you again soon. Hopefully, we'll have you on again after
ah,
we're more streamlined.
okay. Well, thanks, Scott. Appreciate it and appreciate class.
Appreciate you. Thanks, Faith. I hope everybody enjoyed the discussion with Faith as much as I did. She was a great first guest to have on, and I truly appreciate her joining to chat with us today. If you enjoyed the podcast and want to stay tuned in to future guests, please like and subscribe. And really appreciate everybody tuning in today. Have a great day.
Thank you for listening to the Lending Edge podcast. We hope you enjoyed the episode. Be sure to subscribe and follow.